In this video, we're going to have a look at how to calculate someone's taxable income. To calculate someone's taxable income, you first need to work out what is their assessable income. Once you've calculated their assessable income, you then calculate their allowable deductions. They are allowed to deduct from their assessable income and subtract allowable deductions from assessable income to calculate the taxable income. Assessable income is any income that you derive. It includes salary and wages that you receive from your employer, any tips or other payments for your services. So if you were a waiter or a waitress and you received a tip, any allowances from your employers. So you might receive a uniform allowance or a laundry allowance, maybe even a tool allowance, bank interest on bank accounts, dividends from shares in companies you may own, any bonus or overtime payments, any commissions you received, pensions you receive from the government, rent on any investment property that you rent out. Pretty much any income that you receive can be assessable income. One-off income you receive, like if you win the lotto, isn't included in assessable income. Neither are any loans or payments you receive from friends or family if it's personal in nature. So allowable deductions are expenses you incur in earning your income. So if you earn salary and wage income, which is the most popular type of income that most people earn, you can claim any expenses that you incur in receiving your income. So for example, if you have to travel for work, not to and from work, but if you have to travel as part of your job, you can deduct vehicle and travel expenses. If you have a uniform, you can deduct the cost of purchasing clothing, getting that cleaned, dry cleaned. If you work from home, you can have a home office expense. You can also deduct your mobile phone, internet or home phone expense if you use them for work. Any overtime meals, if you get paid an overtime allowance, can be deducted. Any self-education expenses you incur in order to get a promotion or keep up to date with the information you need at work can be claimed. Any tools, equipment or other income or other equipment that you have to pay out of your own salary and wages, you can deduct against your salary and wage income. You can also deduct other expenses against other income. So for example, if you got a rental property, you can then deduct your rental expenses against that income. If you have borrowed money to buy some shares and you are receiving a dividend income from those shares, then you'll be able to deduct the interest on that loan. So any expense that is connected to you receiving income can be deducted. In addition to that, you can also claim some general deductible expenses, and they are the cost of managing your tax affairs. So if you want to lodge a tax return and you go to a tax agent to submit that on your behalf and they charge you an invoice, you will be able to claim that on next year's tax. Any gifts or donations to registered charities, you will be able to claim as well if they're over $2 and you get a receipt. And any personal super contributions you make to your super during the year, you can also claim a tax deduction for that if you have let your super fund know. So that's a brief summary of allowable deductions you can claim against your assessable income. So we have a look at an example and we want to calculate Bob's taxable income. And to do that, we have some information about Bob. So during the year, Bob has received the following income. Salary and wage income from McDonald's for $42,000, interest income on savings of $3,500, and rental income of $6,300. Now, all of those items will be included in Bob's assessable income. So to calculate Bob's assessable income, so that's going to equal 42,000 plus 3,500 plus 6,300. So Bob's assessable income is going to total 48,650. Now we've also been given information on what expenses Bob has incurred during the year. So if we have a look at those expenses, washing work uniform of $140, union fees of $520, new pair of protective shoes for him to wear at McDonald's of $80, life insurance for $840, income protection insurance for $1,350, and rent expense relating to his rental income of $10,200. So let's have a look and see which one of those we can include in Bob's allowable deductions. So the uniform, the union fees, and the new pair of protective shoes are all directly incurred in relation to Bob's job at McDonald's, so they can be included in his allowable deductions. Bob's life insurance payment of $840 is not connected to Bob earning income. Life insurance is for when, after you've passed away, a person you have nominated can get a payment. So it's not in relation to any income that Bob is earning, and it's not part of the general deductions that you can claim for. So life insurance will be non-deductible for Bob. Income protection insurance, on the other hand, for $1,350 will be deductible because it relates to Bob insuring his income that he's receiving from McDonald's. So if Bob was to become sick and had to have several months or longer off of work, then that insurance would replace his income he's receiving from McDonald's. So he would still be receiving income and being taxed on that money. So that income protection insurance is deductible against Bob's salary and wage from McDonald's, and the rent expense is deductible against the rental income. So rental income and rental expenses are related. The salary and wages is related to the washing uniform, union fees, the new pair of protective shoes, and income protection insurance. So we can now calculate Bob's allowable deductions based on that information we have been provided. So that is going to equal 140 plus 520 plus 80 plus 1350 plus 10,200. And because it's not deductible, the life insurance amount of 840 we won't include in our calculation. So Bob's total allowable deductions is 12,290. So now that we know what Bob's assessable income and allowable deductions are, we can go ahead and calculate Bob's taxable income for the year. So to calculate Bob's taxable income, we take his assessable income and subtract his allowable deductions. So that is going to equal 48,650 minus 12,290. And that comes to 36,360. So based on the information provided, Bob's taxable income for the year is going to be $36,360.